When it comes to investing in mutual funds, NRIs are generally confused whether to use an NRE account or to use an NRO account. Now, there's nothing good or bad in this. It all comes down to your particular needs. In a few conditions, it's best to use an NRE account, whereas in other options, NRO account is more appropriate. So let's discuss 3 key differences and understand what NRE NRO accounts are. The first key difference is the purpose of the account. The NRO account is designated for NRIs to manage their income earned in India, such as rent, dividends, pensions, while the purpose of NRE account is primarily for NRIs to park their foreign earnings converted back to Indian currency. Secondly, funds in an NRO account are not freely repatriable. This means that there are restrictions on transferring this money abroad. However, up to $1 million per financial year can be repatriated out of your NRO account through your NRE account. Now, NRE accounts for that matter are fully repatriable. Both your principal along with interest can be repatriated without any restrictions. This makes it ideal for NRIs looking to freely transfer their money abroad. The third point is that income earned through your NRO account is subject to Indian taxes. The income earned in your NRE account is totally tax-free, but you may have to pay taxes on that in your resident country. Now, to know more about NRE and NRO accounts, watch this video. So coming to the point is, when should you use your NRE account to invest in Indian mutual funds? Now, if you're someone who earns abroad and sends money back to India, you have to invest using your NRE account. Similarly, when should someone use their NRO accounts to invest in Indian mutual funds? Now, if you want to invest your earnings earned in India, like your dividends, your rental income, your FD interest, in some cases, if you have withdrawn money from your older EPF or PPF accounts, which also comes to your NRE account, let's say you have sold a property, the money for that also comes to your NRO account. So in those cases, it's better that you make investments from your NRO account only. But make sure that one important point to note here is that NRIs are liable to pay TDS, which is tax deducted at sources on their mutual fund gains, and sometimes the TDS liability is slightly more than the actual capital gain tax. In such cases, you can use a lower TDS certificate, for which someone who is a good chartered accountant and well versed with NRIs can help you. Also, one more thing which I want to highlight about the holding pattern. An NRE account can be held jointly with another NRI person, but not with an Indian resident. Whereas an NRO account can be held jointly with other NRI or a resident Indian also. So I hope this video gave you clarity in terms of investing into mutual funds and using which account for same. And if you need help to invest in Indian mutual funds and want somebody to give you professional advice and make sure that you make the best possible returns while also managing your risks in mutual fund investments, please reach out to us. I have been serving NRIs for more than a decade now, and I mainly specialize into mutual fund investments. Also, don't forget to join our NRI related WhatsApp group. You can find the link in the description below. Thank you.